In the year 2007, actually 2007, I was at a class at Stanford Business School and did my thing at the class. And when the class was done, as is wont to happen at those things, a student came up to me. And we started talking, and he asked me a question. And the question he asked was, do you know how many people live off the grid? I said, what do you mean by that? He said, do you know how many people, Tom, live without access to reliable electricity? I said, no, I don't know. He said, it's 1 in 4. And he said, the 1 in 4, that's a huge number to me. And he said, what they typically do is use kerosene lamps to light their houses. So kerosene looks something like this. If I can get that to go. Not so easy with one hand. There we go. So a kerosene light looks something like that. A lot of reasons why that's not a great solution. One is it can burn your house down. Other is, if you're breathing the kerosene fumes, terrible for your health. Got to buy the kerosene. Kerosene's a recurring cost that people have. And so this student said to me, he said, the mission of a company that I'm trying to build is to replace kerosene. And he'd connected up with a partner at the business school and a couple of design school students. And they had just won a business plan competition. And they were looking for investors. It's very hard to get investors if you're a student coming out. So I ended up going out to lunch with this guy. Went out and visited their office in Mountain View. And it was an office where there was all sorts of junk around. There was stuff they were trying to figure out how to build a lighting product or lighting products that could help solve this problem and help replace kerosene. Ultimately, what they came up with, here's an example of one of the 3 products that they have. Solar panel on the top, stick it out in the sun for a day, and that's the level of light that comes out. So this light cost $8. And in the developing world, you can borrow the $8, pay off the loan with the money that you would have been spending on kerosene cost. And at the end of a loan cycle, say a 80-day, 90-day, something like that loan cycle, you own the light, but you still don't have those kerosene costs that you would have. So you're better off economically and on multiple levels. So, right now, the shipping run rate for them is something between 50,000 and 65,000 units per month. And companies approaching break even, it's approaching 8 figures. So it's potentially an excellent financial success as well 4 years later. It's on the path for that. So the reason I tell that story is it gives an answer to a question that I get. I get it from my wife a fair amount, actually, is why do you do this? Why do you do this impact investing so much? And so the answer for me comes in, it matters, and it matters at different levels, and it comes out of that story of Delight is the name of the company. So it matters to the customer client. This light's better than kerosene, no question about that. It matters to the social entrepreneurs. In this case, business school students, hard to raise money. The money matters, but there's occasional advice or guidance that can be tossed in as well, all the better. So if there's some sort of intellectual capital that can go in alongside the financial capital, great. At a third level, matters to me. In this case, I'm the investor. It's fun doing impact investing. It's really quite interesting. And if you can put financial return with the ability to maybe recycle some dollars that come back and do it again and again and again, that whole brew turns out to be a uniquely satisfying combination, I think. So that's how I answer my wife. She seems to be buying it so far. Haven't always been doing this. And it was mentioned by John that Ken and I have been longtime business partners. So here's how I think about what's gone on in the past. This chart has time on the bottom, so it's a little more than a 20-year period. And it has on the horizontal or the vertical axis the value that I've been aiming at. So in some cases, it's aiming directly towards financial value at the top, aiming directly towards social value, and some blends of that, combinations of that. So So the way I think about it, what I've been doing is there's been two pairs of activities. The first pair of activity is down here in the lower area. It's financial in nature. It's what Ken and I have been doing together. We still are doing it together. And I would describe that by using the roles that I played in that. So I've been an entrepreneur, I've been an investor, and I've been a partner in that spot. So let me talk a little bit about those two pairs of activities, and then we'll move up to the second pair of activities. So the first one is this idea of, we had an entrepreneurial journey together. We ran a company, owned it for 10 years. It's called First American Records Management. By any financial metric, it was a success, worked well. It was a great experience for us. But when you look at some stats, it just doesn't give the story. It's a messy journey being an entrepreneur. And when I mentioned the D-Light story in the class and all, it was they do a case on our company at Stanford Business School, and that was the reason that Ken and I were there, and the student had come up afterwards. And they dissect all the crazy things that we did during that process. So it's messy. But we really learned a great respect for the entrepreneur journey itself and love entrepreneurs. Entrepreneurs are very interesting people, and the social variety is particularly interesting to me anyway. And so the second in this pair of activities, again, financially oriented, is investor. So we sold the company, we took proceeds, and we began to make investments, angel investments. We've done 28 deals over the years, and we're on track for, the jury's just about in on this, because it's been a long time, so there's a few hanging out there, but we're on track to have this be a success on the financial metrics as well, both absolute and on a relative basis compared to other people doing this sort of thing. So that has been wonderful to be able to fuel other things that both Ken and I would be interested in doing, and we've gone off and done our separate things after that. So a pair of activities that I've been involved with, I'm calling, instead of by the roles, it's by the activity itself. To me, it's felt like an experiment, one big exploratory laboratory where I've tried a bunch of things. The first area that I got involved with was what at the time was called venture philanthropy. So some people call it strategic philanthropy, high engagement philanthropy, impact philanthropy. But to me, the definition of that is anytime you're trying to insert some business or entrepreneurial DNA at an extra level. So that's what I'm thinking of. And you're thinking about scale, and you're thinking about maybe making ends meet on fee-for-service kinds of things. Those are some of the characteristics of that world of venture philanthropy. And for me, I've made 13 what I would call investments in that arena. And this term, move the needle, what I'm thinking about that is how I get involved with them. And I try to have an impact on the firm itself. That works sometimes and doesn't work other times. But about half of those investments for me, I've been able to participate in a way that I thought moved the needle. And that's an important criteria for me. And measurement is a really hard thing in this arena. And my observation is I'm not going to spend a ton of time figuring out a universal measure that I can use. So I'm tracking context-specific measures firm by firm and doing that in collaboration with the entrepreneurs running the firms themselves. So the second set of activities is this idea of impact investing. And the term that I like is right out of the book Andy showed. It's impact investing for blended value. It talks about the activity as well as the target. I've made 12 investments in this arena. The multiple on investment return expected is 3x, 3 times. But that's a funny number because that really has what would be called unrealized value. So those investments haven't come back yet. So the truth is, I'll believe it when I see it, but if you go by last round valuation from the firms that I've invested in, it looks like it is going to return nicely. So it has very good prospects at this point. It's uncorrelated to other investments that I have, and that's a real plus. And once again, I don't feel in a situation to crack the code on measurement. So we're working together on context-specific measurements. So when I think of capital, it's financial capital and it's intellectual capital both. And here's how the mix is for me at this moment. Is on the time, on the intellectual capital side, that core stuff, that financial stuff, that first pair of activities, not spending much time on that at all. And, but on the explore side, that's really where my time is going, on this explore, the social impact lab, this pair of activities. And on the money side, on the core, it's about 2/3, but a pretty healthy allocation is going towards this social impact laboratory space, if you will. And I'm very open to rethinking that and love the idea of having partners like Eleos to help me with that. So that brings us up to today. And what's happening for me now is there's a question that's working on me. And it's a question that's been working on me for a long time. And it's this idea of how do I integrate that set of experiences? How do I learn from that set of experiments? And then how can I leverage that? So I don't know what the answer is to that yet, but I've been trying to figure out little bits and pieces of it as I go. So let me share a couple. This is a big slide here, so let's not get too crazy about that. Let me pick a few stories off of that and try to use those as examples. But this first one where it says, attended New Profit Inc.'s holiday party. This is a story about leaping before you look. So for me, I got invited to a venture philanthropy firm's party. I didn't know anything about it. The guy who invited me said, oh, it's kind of like this, you know, there's entrepreneurial, you know, we're going to insert some of this stuff. You should go listen to these guys. So I said, all right, I'll go. I don't really get it. I don't know what it's going to be about. I went to the venture capitalist's house, big foyer, circular staircase. It was a great setup. And the founder of the firm, it was called New Profit Inc., she was just excellent. She talked, and she got me motivated on this idea of participating in a fund, being one of the investors in a fund, and how that might work to actually help scale some of the firms that she was investing in. And then she brought out 4 of the entrepreneurs that they'd invested in the early stages of this fund. And the 4th one came in, I was standing at the bottom of the stairs, the 4th one came in a little late, and we chatted just for a second, and then she got up on the staircase and started talking. It was Wendy Kopp from Teach for America. I don't know if you know anything about Teach for America. I recommend reading up on it and checking it out. Early days for her, she was just an incredible a person with a vision and thoughts about how to take very smart college students and set them up in resource-poor settings to teach for a couple years. And then the part that really got me was then you're 23 or 24 years old and you're going to spend 40 years thinking about educational issues in the U.S. after that. And that seemed to be a highly leveraged activity to me. So I went in, the leap part of this story is, I didn't know hardly anything about this going in. I go to this party, I hear the founder talk, I heard Wendy Kopp, and I couldn't hardly sleep on it that night. And the next morning, I faxed in a commitment that was an order of magnitude larger than any other philanthropic commitment I'd made. It was the next day. And it just felt right. And now, the end to that is that Forbes Impact 30 just came out a week or so ago. And from the portfolio, there was fully 1/3 of the Impact 30 has come out of this New Profit portfolio. So it's been a remarkable success. I wouldn't have, had I done too much thinking about it, I'm not sure I would have gotten it. So the message for me in that was, leap before you look. But that isn't always a good idea. And so here's actually a counter to that. Is I also failed recklessly with an investment. And you know, here's how this went. Actually, in 2007, or it's 2008 by the time it came through and I realized what I'd done. So there have been several years since that New Profit story that I just told you. I actually learned a bunch from New Profit about how to do some analysis and due diligence related to making investments. So I thought I had developed a pretty good checklist, and I followed it pretty well. But I found myself in a situation where I met a guy from sub-Saharan Africa, and I just fell in love with the guy. He was a Rhodes Scholar. He had worked for the World Bank. He was very smart. He had 2 young sons. I could relate to that. There were just lots of things about this guy that I liked. His business model makes sense to me. He was very articulate in explaining it, and I really went for it. And I had a due diligence checklist, as I mentioned, and I wasn't following it, though. I was blinded by the amount that I just liked this guy. And it crashed pretty quickly. And I could have sensed that was going to happen before. So to me, there's a continuum that's sort of been forming in my head that I'm wrestling with. And the continuum has, let me paint it in a bad way, in a negative way. Recklessness on one side and analysis paralysis on the other side. I think both of those are ineffective. So where is the spot in the middle that's right for me and for you? I think that's a worthy wrestling match to have. So I'm still working on that. One little addition to that might be that the next one over, in 2009, it says join the PCC, the Patient Capital Collaborative Investment Committee. So after I'd had that failure, I was invited to be on an investment committee, and I said to myself, wow, I'm going to jump in on this. There's relatively conservative, professional guys involved with this. This is a chance for me to stand up on a sentry post, take a sentry post and see what they're doing, learn from them, grow from that process. And so being on the committee, I'm able to really see how they're going about their professional investment, and it's helping me a ton. I think that's a great idea in general, this idea of the sentry post. If you're not directly in, or even if you are, if there's ways you can get in spots where you can see what's happening around you and learn from that, that's an effective way to get involved here. So let me scroll back. I wanted to tell one more about Borderlands, since that's on your card. So I had a bit of an epiphany about Borderlands. I went to Harvard Divinity School. It was one of the things I did when I got to Massachusetts after living in the Bay Area for a long time. And I took a Master's of Theological Studies degree, which is a very interesting thing. The banquet table of Harvard is open. You can take classes at the Kennedy School of Government, take classes at the law school, all over the place. So it was a great experience for me. And I was in a class on globalization. And in that class on globalization, there was a real eclectic mix of people. And what I noticed was that the Divinity School people and the business school people, or Kennedy School people, talked in a completely different way. The business school people could lean forward and with great confidence deliver the line, even when they didn't know what they were talking about. And the Divinity School people were much more tortured and subtle and nuanced, and maybe it's this and maybe it's that. And that communication, the style of communication was so different. I found that to be really intriguing, because when the professor was excellent and was able to get these different communication styles working together, and when they bumped up against each other, really good things happened. So when the people weren't talking like that, when they were actually able to get to each other, it was excellent. And so I found that that's a unique thing that I'm trying to pursue on my own, is to be able to communicate in those different ways. And that if you can get in situations where you're bumping up against borders, public sector, private sector, social sector, private sector, international, national, local, there's spots that you can bump up on the borders where really interesting things happen. So maybe one last thing, and then let's move towards some questions. Went to the Opportunity Collaboration this October, and Andy was there, and it was a very interesting gathering of 300 people down in Mexico from all around the space. And while I was down there, I referred back to an investment that I'd made, a firm that I'd been involved with for quite a long time. And I got to know the guys in 2005. It's a place called the Global Giving Foundation. So when I met the Global Giving Foundation chief, it was on what I would call the perpetual listening tour. You know, it was where I was taking meetings with all kinds of different people and just wanting to percolate around in the space and learn as much as I could. And he was doing the same, so we ended up meeting. We didn't know anything about each other much. We had a brief introduction. And we had this spirited conversation for an hour and a half. And at the end of this conversation, he just had this smile on his face, kind of a wry smile. I said, so what are you smiling at? And he said, and this is in 2005, and he said, I'm finding that there's more people like you and me out there now. And someday in the future, there's going to be lots more collaboration between the people like you and me. And when there's lots more collaboration, then some really good things are going to happen. And when I was at the Opportunity Collaboration this October, that seemed as if it was actually happening, what he was talking about. So I was referring back to his smiling face in that moment. And so that's how I think about Eleos as well. And people like you that are coming to interact with Eleos, is there's more people out there that are interested in this. And if we collaborate well together, we'll create more social impact. Thanks.